Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Dustin Collins, CEO of the Ottoman Group. Dustin, welcome to the show.
Thank you, Mike.
Tell us a little bit about your company. You run a number of funds, mostly concentrated in metals and mining, hard assets. Tell us a little bit about it.
Yeah, great. Thank you, Mike. Appreciate being here. So the Ottoman Group side is our wealth manager, investment manager, and asset manager. We do that on a global sphere. We're in 6 countries where we custody. Predominantly, we run funds underneath it as well, separate and distinct from our wealth management practices. So what we do with the LP side of the house is Mining Energy Fund, which we're launching at the end of this year. That's going to be focused on pre-production when it comes to natural resources, mining, energy, domestic, and offshore. So each one has a portfolio manager that runs the LP's fund strats for us. And then in addition to that, we've been building out a lot of debt and against assets for clients with the credit and liquidity issues.
Which is actually the environment now is very positive for your business. The banking crisis, the sort of risk aversion on the part of financial institutions to lend. You're stepping in there. Where do you see the most need for credit? Is it across the board, across the spectrum, certain regions? How do you see it?
Well, with as you said, Mike, it was the global credit crisis has just tightened up substantially to the point where we're able to have assets that just keep coming. Liquidity is in dire need. We wind up being the asset provider, holding it, providing liquidity, whether it's natural resources, reserves, in ground, above ground. We're able to do those, bonds, a whole legion of different areas that even exotics into antiquities and precious gems and stones, only because there's this dire need on the global level. But you'll see that as the same way that the cycle rolls from the U.S. last year, it was great picking up U.S. assets. Now European with the credit crisis, Greece, Spain, and then rolling out. So
now, in terms of activity and given the problems in Europe and the slowdown in China, are you seeing any sort of a cooling off in activity in the resource area?
You're seeing a cooling off when it comes to trading, day-to-day, intraday trading, if you will, physical or on the 3, if you're on the commodity side. But for the long-term investors, it's actually more ripe than it has been. You're seeing a cool off on markets. It might change
because of a price adjustment. Because now it's cheaper to get in. Is it basically that?
It's cheaper to get in. You're getting twice as much for sometimes your dollar, depending on where you are. And the investor pool, in a global economy, which we are, definitely in, and we most certainly service. The investors are coming from different spheres. So if the Europeans aren't investing into Africa or Brazil right now because of certain market indices, okay, well, what are the Asians doing? What is Myanmar? What's Malaysia? What is China doing?
What is China doing?
China has been and continues to keep going into Africa, Brazil, Caribbean. We have under the Ottoman Group rolled out in Africa a opportunity infrastructure fund, and in Brazil energy real estate, and then in Caribbean we're rolling out the opportunity infrastructure fund, and we're doing that in the same step that China's ahead of the curve when it comes to U.S. Investors, which is an old tale. It's nothing new when it comes to outside investments, but you're seeing a lot of ramp up even from Russian markets chasing into where there's distressed opportunities and dire need of infrastructure. So that's why we brought in, we partner with local experts in those areas. We don't pretend to go in and do the Western sentiments in those markets. We partner with locals, boots on the grounds, that become our partners to run those funds, in Africa, Brazil, and also Caribbean.
Are there any particular countries in Africa that really stand out? Probably South Africa, I would suspect. What else?
Yeah, South Africa's been ahead of the curve, as you know.
Long time, right? Yeah. The biggest economy there.
Yeah, but Kenya is now the financial center. As much as it might not be helpful to some of our business, Kenya is now building itself into a financial hub, if you will, which is where one of our offices is. And then Gabon is another one, but it's different, geographically. But Kenya is now, they're getting ready to do a 3-peat stock exchange backed by the UN. and the IMF, where they're rolling on a stock exchange. Actually, it's a commodities exchange. Sorry, but it's good because it also allows for the three regions up there: Djibouti, Kenya, and Samoans that are rolling into those macro economies to be able to sell their coffee, their tulips, their natural resources on a market.
Interesting. You also have a very unusual fund, which is a sports hard asset fund, I think you call it. What is that?
Yeah, well, it's a sports and hard asset media fund. The whole long name is just to distinguish ourselves from not being in the film finance business, which is, to some people, investors, is inherently risky. So that's why it's the long name of, we would just say sports and media fund.
How does it work?
Well, what we do is we take down divestitures and manage portions of sports teams, professional, U.S., offshore, minority positions generally. We don't take a full acquisition of a team, but we manage the portfolio along with revenue-producing media assets, whereby you're talking about media catalogs that have revenue production and copyrights, and then corporate licensing rights.
Television?
Television, absolutely, and we're picking them up in emerging markets too. So the EMEs are,
wow,
we're able to pick up and get an opportunity when it's ripe. It could be a London footballer team or a soccer team, down in Brazil, or in the U.S. it's MLBs and NFL and different league rules that apply. So it allows a lot of our foreign investors to come into the U.S. It attracts a lot of Middle Eastern capital because it is Sharia compliant, as our mine and energy funds, which is a huge area for us. So we have to be Sharia compliant on the investments, but it also then attracts into you'll see a lot coming from Russia capital.
And it looks like it could be really lucrative if you look at the recent sale of the Los Angeles Dodgers at $2 billion, right?
Absolutely.
You talked about foreign investors coming into the U.S. to participate in that. Talk a little bit about that flow. I mean, are you seeing rising interest in U.S. As an investment center?
You're seeing rising interest into the U.S., I believe, and it's funny you mention this because we just had a meeting with our attorneys on this down the street before we came here, and we used the $1 million investment policy as a way and a means to attract foreign green card investors into the fund.
Right.
And so we're actually classified on
so that
on a federal
investment
level.
Allows them to then
Green
apply
card,
and get
no,
green card approval.
We have separate immigration attorneys that process their card here in New York that handle all the processing, the green card for them and their family members.
Chinese?
You'll see,
French with the tax that's going up. Who's coming in?
Chinese, South Africa. You're seeing a huge push out of Middle East, and it's not to move. That's the thing. So you have folks that'll put up the money. It's there for 2 years in a managed account, and the 50% goes back to the client. They get it for them and their immediate family on the investment, and we're seeing a large aggregate of people coming in through these investment strats. But a lot of times it's the elders carrying it for their children, not necessarily for them. So they're not coming here; they're just getting the green card status and the ability to have the travel. But it's been a large ramp up. I mean, we used to have the EB-5 program in Bush days only,
right?
Which was $500K, and the money went into the Fed program, not into private vehicles.
Right.
Now, if you're certified and you show job creation, which is what we have to, what we have to meet the bar, we can bring in these funds, and you can go into any of our fund structures as long as they're U.S. and we create 10 jobs per million investor, which is the criteria that we have to meet for our burden.
Now, who are your main investors in these funds? Are they pension funds, institutions? Who are they?
Mostly we're talking about offshore pension funds.
Right.
And then you're also in the family offices, ultra high net worths. A lot of capital comes out of Singapore office in the Middle East. Those tend to be the areas, all AML and U.S. Patriot Act compliant, but that we've been pulling from. In addition to some of corporate pensions who are sitting on large liquidity on their books, so they opt to go into some of our managed accounts with no lockup period, no pools, no trade proceeds are broken if you're taken out of an LP. So we can, in the wealth management side of it, we can cross-utilize our different services for the client's needs. So we're not necessarily just going, oh, come lock up your money in a blind pool in the private equities and the hedge funds. We give them an option so they can maintain liquidity and draw it if they need it, which
Now, in a macro picture, are you concerned at all with the weakness in the global economy, events that are going on in Europe, maybe the China situation? You think we're going to transit all this and come out okay at the end?
We always seem to. I don't think the end of the world is coming, but it's definitely harder, and it makes the global footprint more necessary. So if you're living in a vacuum and you're one-dimensional scope, without the foreign markets, the good thing for a lot of folks is being able to diversify your currencies.
Are you seeing that among your U.S. investors, a desire to spread out a little bit all over the world?
Yeah, no.
More so than ever now?
More so than ever. And one of the good thing is, because if you're feeling the pinch as an investor or as an individual, Main Street, Wall Street, in Singapore, it doesn't matter. If you're feeling it and it's one-dimensional where your investments are, and any wealth manager will always say, oh, please diversify your assets, but diversify your assets off different regions or continents is sometimes not within the wheelhouse at the the local BD or something. So you'll see a shift, and that's the reason we don't build these LP funds for Ottoman Group side. We're not building these LPs just to have a lot of different options. It's a need and it's a niche to have the clients go, no, don't go just all in U.S. mining and energy. Spread it in the Caribbean market, spread it in Brazil, so you won't feel the same pain. Which is good for the client at the end of the day.
Absolutely. Very good advice. Tried and true diversification. Dustin Collins, the Ottoman Group, thank you very much for joining us on the show.
Thank you, Mike. Appreciate it.
That's it for now, folks. This is Mike Norman. See you here next time. Take care. Bye-bye.